So welcome everyone to this digital panel discussion on the Future Fund and the Innovate UK Fund that have been announced alongside it. Just so that you know, this session is going to be recorded and will be made available later on for others who aren't able to join in real time. And the session will have the chat functionality disabled just in order to avoid distracting everybody along the process. So if you have got questions for the panel that I hope very much that you will have, please post those to the Q&A box and then we will pick those out after the panel discussion itself. So it's a real pleasure to welcome a very distinguished panel this afternoon who are going to talk about this intervention and these measures that are being taken. Firstly, from DCMS, Gila Sachs, who is Director for Digital and Tech Policy. Welcome, Gila. I will come back to each of you in a moment and ask you just to give us a little bit of context of your role in all of this and your thoughts about it by way of introduction. Alongside Gila, we have Zoe Webster, who is Director for AI and the Data Economy at Innovate UK. And they are joined by our two illustrious males. On the one hand, we have Francis Evans, who is Head of Business Finance and the Business Growth Director at BEIS. And last, but by very no means least, we have Dom Hallas, who is the Executive Director of Coadec. And I think, Dom, you are narrating the entire development of this fund in real time through a sequence of webinars. So those of you who are avid fans of this may have even seen Dom appearing in other contexts even earlier today. So let me just set the scene a little bit for why we're all here and what this is all about. Clearly, the impact of the pandemic has had a significant effect both on individual companies and their ability to conduct business, but also, just as importantly in the startup world, on the investment community. And we have seen a very rapid and perhaps not surprising withdrawal of funding in some environments and a slowing down of investment decisions in others. And such that there are numbers of companies that are obviously concerned about the way this will impact them in the future, and in that future is a very short-term future. It's not a matter even of months, it may even be a matter of weeks in some cases. And so there's no question that as the government has addressed other parts of the economy and the damage that's taking place there, it's also looking at the startup community, the scale-up community, and early stage businesses, and trying to assess what kinds of measures might be taken. And organizations like Coadec and other partners have made their positions very clear, and we'll hear a little bit from Dom in a moment about the context for some of that. And so we heard last Monday of a new set of funds announced to try and ease that pressure on liquidity and try and increase confidence on the investment side. And this is particularly critical for deep tech companies and technology businesses, where the road to producing revenue generating products is quite long, and the need to do R&D up front is an essential part of putting that business together. Digital Catapult has been contributing to increasing government's understanding of what's going on pretty much in real time across the landscape over the last couple of weeks, providing information along with others from the private sector, from the private equity community and so on, into DCMS and BEIS and Innovate UK about the condition, about what people are experiencing, about the kinds of challenges that the community is facing. And clearly, the kinds of dependencies that large numbers of startups have on both the angel community and the private equity community is pretty significant, as we all know. And so there have been a number of surveys. The local Globe carried out a survey that was published in the FT this morning. Digital Catapult published a survey internally amongst government departments, which showed the degree to which individual investors have indeed been forced to stall as the level of uncertainty has grown over the last few months. And what we need to think about really, therefore, is what the response should be to all of that. And that is what brought about the announcement of the fund and the announcement of new monies going to Innovate UK. But clearly, there are lots of questions still unanswered about the way in which these funds will be dispensed, the terms under which they'll be made available. And much of that thinking, I have to tell you, is going on in real time. So our guests who are with us this afternoon are here to give you as much help as they can, but you also need to be understanding of the fact that this is developing as we speak, and that there are some areas in which there simply aren't answers yet to some of the questions that, that I'm quite sure many of you will be wanting to ask. So let's get started, and perhaps I could turn, Dom, to you first as a representative of a large number of members. I don't know how many members Coadec has actually, but very much embedded in the community. And just to give you perhaps a sense from the startup and scale-up's perspective of what the real world concerns are here. Dom,
yeah, definitely. No, thanks, Jeremy. That's and you summarized it very well, which is, look, like pretty quickly early on in the crisis. And I've been, as Jeremy said, I've been doing so many webinars on this that I have my spiel down at this point. But like when I, on the 9th of March, I was at, this is 2 days before the budget, I was at a round table with the Chancellor, and coronavirus was barely on the agenda. And then within a week or two of that moment, you know, suddenly the whole economic response, both of the government, but also understandably the thoughts and minds of every business who's on this call, was on how they're going to cope and survive through this crisis. So it's that fundamental shift that happened very quickly. And, you know, we can tell that story of the impact it's had on the startup ecosystem, either through the data, which shows, you know, Bowhurst have investment down 32% in Q1 this year. And bear in mind that, you know, the end of Q1 was the bit that was impacted. The bit before that actually largely wasn't. Or you can tell it in the stories. And I have, you know, an inbox full of founders who've had term sheets pulled, or one where they were doing their due diligence and then they had their offers pulled. And we know that the investment environment has fundamentally changed for understandable reasons, which is that it's hard for investors in these moments to be taking these decisions. And in many cases, perhaps sensibly, they chose in that major moment of crisis to sit on their hands and see what developed. But obviously this causes a huge problem for our ecosystem, because we know that, you know, these businesses don't have a lot of runway. They don't have a lot of available capital. So, you know, what is the challenge? It's that in many cases, even if investors wanted to support businesses, you know, EIS funds, crowdfunders, micro VCs, angel syndicates who provide the bulk of early stage capital don't necessarily have dry powder to invest. And, you know, so we know those early stage businesses are impacted more. And the initial government response, the initial government support, which was designed for 75% of the economy and works, you know, for that portion, doesn't necessarily work for the startup ecosystem and the growth driven model, in which you lose money early on as you grow and then you make money later. And so like the fundamentals of the CBIL structure that was designed by Treasury as a loan simply wasn't effective for this cohort of businesses. So that's the sort of starting point. And that's, you know, ultimately the terms on which, you know, ourselves at Coadec, but also a wide range of other groups and businesses and everyone began having conversations with the government about what ultimately resulted in the package that we'll be talking about today.
Excellent, thank you, Dom. That's really clear, and I think it's worth just getting a sense from you, Gila and Francis. You know, as this picture began to unfold, and clearly the government acted pretty quickly for a large part of the economy in terms of putting measures in place, but there was something of a delay in addressing this area because of the complexity of it and the difficulty of how to approach it. Can you just give us some sense of you know, as you kind of engaged with Treasury through the early part of this, and you started to explore with them what was feasible, how did the thinking progress, and what were the challenges that you were trying to address up front? Maybe Gila, perhaps we can start with you.
Sure, thank you. So maybe just kind of by way of scene setting. So as Jeremy said, I work in the Department for Digital, DCMS, and oversee digital policy there. So when this crisis started to unfold, when we look at these issues, when, as you say, we start talking to Treasury, we're looking at a range of factors. So we're trying to understand how the digital economy kind of in its core is being affected. But also the ways in which the kind of interconnections in different parts of the economy. So how is what we're seeing in digital affecting and being affected by changes and developments in other sectors? And then critically, we're also looking at how technology was and could be mobilized as part of the response. So not simply kind of how was tech being affected, but how was tech affecting the government's response? And those things have been kind of playing into each other in really interesting ways over this period. And maybe that's something we'll come back to. When in terms of kind of what that meant for our discussions with Treasury, well, I suppose the first thing to say was that it certainly didn't feel slow. It certainly didn't feel like delay, which is not to imply it's all been smooth sailing. But I think what's been really quite extraordinary to kind of watch play out over these past few weeks has just been the ability of different parts of government to work with different parts of industry in digital and much more widely, to be able to watch and understand the impact as they're playing out in real time. We're only, if you think about it, we are a few weeks into this crisis. We've got a long way yet to go, and yet what you've seen the Treasury be able to do is progressively layer on additional elements of support as different impacts start to unfold. And they and we kind of facing a really critical challenge here, which is that the Chancellor's starting point, I think rightly, has been to target the most impactful cross-economy measures, and the scale of the cross-economy support that's been put out, is unprecedented. It is fairly extraordinary. The Chancellor has put 330 billion pounds of loan funding, out in various forms, and has been able to kind of continually adapt that, including even in recent days, to make sure it's reaching the businesses most in need. And that's been the kind of the primary mode of intervention, to be able to get loan funding out across the economy, and then supplement and complement that with a range of schemes targeting kind of other ways in which these challenges were manifesting, of course, most particularly the job retention schemes and the self-employment schemes. And so the cross-economy approach was kind of clear from day one, but has then been kind of built upon and supplemented and tested. What's very challenging has been, how to deal with sectors, parts of sectors for whom the existing schemes aren't working simply and straightforwardly, of which digital is one, but certainly not the only one. And so there's been, right from day one, a really lively, healthy, very, very open dialogue between DCMS, the Treasury, BEIS, and the various agencies of BEIS and industry, just to try and monitor what's happening in real time. And so it's kind of the last thing I say at this point is, we have a real challenge here, because a lot of these impacts are lagged, and across the economy to some extent. By the time you have the kind of conventional evidence base you would look for in normal times, it's too late, right? You don't want to see the evidence you would typically need to see. And so trying to identify those points where you have enough of an evidence base, not that there is a problem, but exactly the nature of that problem. Where do you target your support? Being able to really be gathering that evidence in real time and be as targeted as you can in your interventions has been a very dynamic and, I think, hopefully quite effective process.
Well, absolutely, and obviously we've still got a long way to go before we know and see how to be most effective in that space. But Francis, perhaps we can turn to you and just from a BEIS perspective, obviously you're looking at a number of different sectors, of which digital is just one. Did you feel and do you recognise the sort of specific nature of the kind of challenge that Dom is highlighting?
Yes, very much so. And as Gila says, we've been we're working, I would say, in a very unusual way. So it doesn't feel as if we've been slow. I would say the pace at which we've been working, to give you an idea, is doing in roughly in days what would normally take months. So things that would take 6 days to a week might well have taken 6 months to stand up in normal time. Because in normal times, the standard of evidence that government would require before intervening with taxpayers' money would be pretty high. And we would want to do a lot of analysis and testing and going out to stakeholders, to the community, to trade associations, to understand the impact of what we might be going to do and then refine it. There hasn't been time to do any of that. And I was reflecting that we're actually working more like a tech company. We are working in a very agile way where we put stuff into the market, see if it works, see what breaks, see what processes don't work effectively for us, and change them in real time, which is quite an uncomfortable.
Is that a process or an approach that we're going to see more of, would you say? Or is that more about trying to understand what the nature of the problem really is and how best to define it? I presume you're not going to try and deploy funds on exactly on that basis straight away.
Well, if I can give the example of the CBILS, the coronavirus business interruption loans that Dom mentioned. So we launched the scheme, which was fine, and the rules worked. And within 2 weeks, we realized that as it were, the pipe through which we were seeking to push this product, namely the bank's approvals processes, were not working, and it was going to fail. So that was an unexpected product design bug, if you like. So then we changed those rules, and then it flowed much better, and we're now lending around 1.5 billion every week, which is more than the totality of SME lending in normal normal times. Sorry, every month, I should say. No, every week. That's actually how fast it's going.
1.5 billion a week, is that right?
300 million each working day.
Right.
Through the banks, through
quite extraordinary. And so what you're saying is you're taking an iterative process, and obviously this is ongoing as we move through this.
So yes, so just to complete the point on CBILS, we then found that larger firms that we thought would have their own sources of finance, in fact, also needed to benefit from a guarantee scheme. So then you had CL bills, the large business scheme, and then we found that the banks were still the flow of funds to smaller firms was still interrupted. And then we've just had, starting going live on Monday, what have been termed bounce back loans, which were going to be CS bills, the small company scheme. So we're evolving and iterating in a way that in normal times we would be nowhere near launching any of this yet, and we're on to our 3rd or 4th generation, is the point I'm making.
Excellent. Yeah,
so,
no, thank you. I think it is important that people realise just how extraordinarily responsive government is being in comparison with the way that traditionally it has been able to behave. Zoe, can I just turn to you? Obviously, Innovate's role in this is slightly different, and in a sense, the choice to put funds through Innovate is a signal of an understanding of kind of the value of innovation in all of this. When you sort of see the role of innovation and Innovate UK specifically in this context of a broader funding context, what's your sense of how you guys are going to proceed?
I mean, we've been looking at it certainly from the perspective of R&D and innovation, and we recognise the importance of business-led innovation in particular in leading the path to growth, whether during the crisis and after it. And I think we recognise the risk with colleagues early on that either companies who are currently engaging in R&D innovation might stop what they're doing, not have the capacity to continue, and certainly we might lose the capacity to come out of the crisis and grow through innovation. So that was where we were coming from. We're looking across the whole economy, so we've been involved, or colleagues have been involved on the kind of getting ventilators and vaccines going as well. So we've looked across the patch, and I think we recognise that when it comes to R&D and innovation, we needed to step in to try and prevent any loss in R&D capability in the UK for now and in the future. So that's where we were coming from. And we recognise, particularly in the digital sector and creative sector as well, that in particular, going on from what Dom was saying earlier, the kind of model there of pre-revenue and needing some time before getting into that point and needing that patient capital or that help alongside was really keen for the kind of startups and scale-ups we're looking at, and recognising their difficulties. We wanted to see what we could do, and echoing what Francis was saying about timescales. I mean, we've moved much quicker than we've ever moved before. I mean, typically to get a competition up and running takes a few months, and we've done it in almost a couple of weeks, really. Right. And that's been what we wanted to do to respond and provide those opportunities.
Can I just ask, just coming back to Francis and Gila, thank you, Zoe. There's lots more to explore around, obviously, where things are with Innovate, but just in terms of the sort of the context of government thinking and the sort of the policy aspect of this, clearly over the last 10 years, the UK has grown an ecosystem of startups larger than any other in Europe, and there's been more funding and more private equity funding has gone into the UK ecosystem than the rest of Europe put together. So there is a hugely important element of sort of global competition in this, and yet in some respects that's a sort of global picture that doesn't necessarily mean an awful lot to an individual company toiling away trying to actually do its thing in its particular area. So, you know, when you thought about this approach, you know, how far was that sort of sense of kind of UK's global position a factor in the thinking, and you know, how does that sit in relation to the you know, being sympathetic to the individual plight of individual companies?
I mean, it's a very, very important kind of part of our context. So, you know, when we, you know, any conversation we have with our ministers, with the Chancellor about these issues, you know, that is the strength of the government's commitment to its digital strategy, to digital and technology being an absolutely central part of the, you know, of our current economy, of our future economy, of everything that this government, you know, kind of from its outset has wanted kind of for its future, for the sense that digital has an incredibly important part to play in the post-Brexit global story. You know, who are we in the world? That, you know, that is as true today, if not more so than it ever was. And so that, you know, absolutely at the front of ministers' minds has been the sense that we have something. I mean, you know, as Zoe said, it's not simply that we are starting from a strong foundation, but it is absolutely vital when we start to think, which we are, you know, already obviously starting to do, what does economic but also, you know, societal recovery look like, that we you know, we preserve the things that we really believe are core to that, you know, and absolutely, you know, innovation, you know, and the potential of kind of, you know, research and development organizations and institutions to work with entrepreneurs to find sources of capital, to find new markets, you know, all the things that you know, everyone around this call, I'm sure most people watching have been a part of. You know, that has never been more important, and that's why, you know, to some extent, you know, it's very interesting working in DCMS at the moment. So DCMS covers a very diverse set of sectors. So when I kind of sit around the table with our kind of, you know, the rest of the management team, I'm looking across people who are responsible for tourism, for, you know, parts of leisure, for arts and culture, for some of the sectors that have been absolutely fundamentally hardest hit. And they are having extremely challenging conversations with the Treasury, who are trying to do as much as they can to support those sectors. But there is quite a different, not better or worse, but just different conversation that happens when we put technology and innovation on the table. Because the one thing that we can be very sure of is, no matter what sector you're in, and again, you could be in tourism and leisure and hospitality or arts and culture, digital is going to be a part of your future. Digital is going to be part of the way that you get, you know, in those sectors, you know, in retail and you know, wherever you look, it's going to be a part of how we get ourselves through this. And so the sense, sorry, just finally, that it wasn't simply that we were kind of arguing the case for technology in itself, in its own right, but the sense at which we knew that, and we know that, you know, that the kind of companies that we want to kind of support and help through this period will be absolutely critical to getting all sorts of other companies through this period, has been, you know, a really fundamental part of the conversation, which we have been having and continue to have with our ministers in the Treasury.
So that's, I think it's really interesting that, you know, that there is this global perspective that you're taking, as well as the sort of immediate domestic one. I'm just wondering, you know, when you made that decision, and when that decision was made to split this, the total amount of funding available between a fund that was going to be a co-fund with the private sector, and the funding of a chunk of that to go through Innovate UK. I mean, what led to that sort of separation? Francis, maybe you can shed some light on that as you think about this. How did that arise? And how should we interpret that? What's the significance of that, would you say?
Jeremy, is it worth just doing a, like, because I think one of the things that we've missed out is the, like, what exactly is the package? Should we do that? Is it worth just doing that kind of?
I'm sort of rather assuming everyone who's watching this already knows that. But you're quite right.
I don't know. I think it's worth doing the top line first, you know?
Excellent. Okay. Well, Francis, why don't you just outline that for us, and then perhaps we can go on to that, follow up on that question that I just asked you.
Certainly. So, well, let me do both at once. So I think the first thing to say is that do not read too much into the way that this was announced as one fund with two elements. There are two different philosophies almost within this, and the innovation side and the future fund are complementary. People can certainly be a part of both. And if we start maybe with the Innovate UK, this is, bear in mind, an additional incremental amount. This is not everything that Innovate UK does, but it's additional support that Innovate UK is bringing to the table, as it were, over and above its current plans, either by accelerating or bringing forward or expanding the grants that were there, recognizing that businesses will be relying more on grants relative to other sources of income. And so that part is in total 750 million, but Zoe, I'm sure, will outline later on the elements of that. So it's not a single amount. And then the 500 million, which in true Treasury style was announced as 500, but is really 250 from government, matched by another 250 private, serves a rather different purpose. So that is to ensure that for companies in scope, where there was about to be a funding round, or as you said earlier, it was just, sorry, as I think Dom said earlier, people were just getting to that point and the due diligence was pulled, or people didn't quite sign the document, so they were just getting to the point where that round needed to happen. It's to buy time so as to keep those businesses whole, potentially keep doing R&D thanks to Innovate UK help, and then get to the next funding round later on in the year or early next year. So very different purposes to those two parts of the fund.
Okay, so let's talk a little bit about Future Fund first. And obviously, you know, the announcement was a week and a bit ago. Obviously, there's a lot of people on this call excited about the prospect and hoping that it's going to provide them with some salvation as they face a difficult future. Where are we in the timeline now, Francis, in terms of being able to sort of deliver some concrete detail to the community in terms of eligibility and how the funds will be deployed?
So people, I assume, will have seen, or if not, they can look it up on gov.uk. Will have seen the headline terms of the proposal, which will be a convertible loan. And the reason for choosing that is that it allows a deal to be done quickly without needing to have an individual valuation and negotiation about a particular company and all the due diligence that would normally go with that. So the initial design was done very quickly. Those headline terms were published, as people will have seen. And the commitment is to launch for applications by the end of May. And so we will be looking, before the 31st of May, to have got a portal where people can go and apply and go through a journey. And it's important to understand, I think, that this is not the same as applying, let's say, for an Innovate UK grant, where it's a competitive process and it's subjective and there's a review. This is very much, here are the eligibility and qualification criteria. And if you have an investor who will invest in your business on these terms, we will match them.
So when do you know that you'll be able to publish those eligibility details? When are we going to see those?
So in the next couple of weeks, between now and the end of May, we'll be publishing those. I mean, clearly, as soon as we've got them. So if we were to say 2 weeks from now, that would be a reasonable benchmark for when we'd be aiming to get, if you like, an interim idea. And then at the latest by the 31st, we would be saying, then here is the portal and the process by which you can apply.
So are you at a point, for example, I'm just trying to sort of understand where you are in the process of being able to sort of reveal a bit more detail. So one of the questions that people are asking is around match funding and whether match funding would be required and what the nature of match funding eligibility will be. Are you at a point where you can shed some light on that, for example, in relation to the Future Fund?
Yes, so that and some other criteria, which I know people, I can see in the questions are querying, such as the amount of equity raised beforehand, those are in the headline terms that have been published. So we're acutely aware that those headline terms say, and that will be the case, that the instrument itself is a convertible loan, and that the match funding would be the same convertible loan on the same terms from the investors. And we understand the problems that that causes with EIS investment, for example. So we're in the throes of having those conversations with Treasury, and I would say it's a very collaborative process. So people shouldn't have the idea that somehow we're going to Treasury and having a debate, or that they're not on the same side. We're all collaboratively trying to get this right in a way that meets the terms of the original announcement and recognises the representations we've had, and considers what do we do in that context.
So can you just sort of clarify for us, because obviously there's been quite a lot of comment about the relationship between the terms that were advertised and the terms that EIS and SEIS operate under.
Yeah.
And is this part of the iterative process that you were referring to earlier? Are you now looking into that in more detail and hoping to be able to address that? Because at the moment it feels as if that there's a disparity there. It's difficult for people to understand.
Yes. So the position at the moment, and which I think people's assumption should be that this will remain, the position is you have the future fund with its headline terms as published, and those headline terms will be elaborated on areas around eligibility. For example, as I say, in about 2 weeks' time, we'll aim to do some kind of an interim update to people before launch. And you have got the rules of the EIS scheme, which remain available and which are there for people to use. So if people ask, what are we doing for EIS eligible companies? The answer is EIS, which is a scheme that has substantial tax advantages and is successful, and brings in a lot of investment.
Given the challenges to investors and particularly angel investors who use the EIS scheme and the SEIS scheme, is there any thought about improving those terms or making those terms more favourable to investors to increase eligibility for that, or is that not on the table at the moment?
So it isn't on the table, but be assured we're considering it, and we're putting that evidence to our ministers and to in our discussions, and considering how the headline terms are there for a reason. They weren't, as it were, made up in a vacuum. So if you then start to change them and you lose some of the reasons why those terms were designed as they were, you can solve one problem and create another. And so we're having, which is a very common policy dilemma. I mean, all the time you're trying to hit 4 or 5 incompatible targets at once. That's the fun.
We appreciate that the challenge of the iterative process in a policy context is perhaps more complex than it is in a digital product development context. But obviously, there has been a lot of concern that we seem to have created an opportunity here which actually is less favourable to the companies and more favourable to investors. And we wondered, I think a lot of people are asking, well, was that a deliberate balance to make it that way?
I mean, clearly it wasn't deliberate to be unfavourable to companies. It was the headline terms as issued are the calculated best option at the time, after quite a bit of deliberation, because as people have said, it wasn't an instant solution that would address the core of the problem for that cohort, if you like, for those firms.
Okay. All right. No, thank you very much, Francis. Gila, can I turn to you? And just over the weekend, there've been some comments in the press about the nature of how this fund is likely to favour those who have already had investment, and therefore how that might sit in relation to the desire that I think we all have to increase diversity and inclusiveness in the way in which public funds are dispensed. How have you managed to sort of reconcile those factors? Because obviously there is a degree to which, as things stand, we're kind of the scheme looks as if it's favouring the incumbents, as it were, or existing investees.
I mean, it's difficult. Again, we need to be really clear that this fund is not it is not. It doesn't exist in isolation. It is not intended to solve the underlying problems or challenges in the sector or in the investment community. we kind of got to be really honest about that. This is not going to be the way we solve underlying diversity challenges. There are big challenges for diversity and against all sorts of measures, for the kind of long-term opportunities and impacts of this sector. This is bridging finance, right? This is intended to meet a very particular challenge at a particular point in time, and not to not to solve that problem, not to shake up the market, not to artificially skew the market. It's the decisions, as Francis outlined, and they were very finely balanced. The decisions ultimately to take a market-led approach, to go with investors and to encourage and support their choices, and to some extent. There are risks attached to that around diversity, and the challenge that we and everyone kind of around this ecosystem will then face is, okay, there are underlying diversity challenges, be that around type of company, around gender, around regional spread, subsector, and so on. There is, I don't want to say there is nothing. There is little. There should be little within the structure and design of the fund that discriminates in any way. But there obviously is a big challenge about making sure that access is opened up as widely as it can. So we need to make sure that exactly through events like this and through the work that you and many others are doing, that the right people hear about and understand the opportunities available. Again, that the fund is positioned as part of a wide set of possible routes of support. And if this isn't the right one for you, there may well be others.
So
and that we think broadly. Sorry.
So I think it's understandable that you can't boil the ocean with one particular fund, and that clearly there are lots of challenges out there that you can't always address all of them all in one go. But given that, though, what would you say the focus for the future fund should be? So what purpose should it be put to? And you've said, look, we can't address some of those other challenges, but so how would you articulate that?
So, when the Chancellor announced the fund, he was clear that the intention was to unlock investment for high growth companies impacted by the crisis who haven't been able to access other sources of support because they rely on equity investment and a pre-profit. So this was targeting, a specific part of the sector. And as I said, the critical objective there was to take a market-led approach to ensure that the funding protects the taxpayer. The reality is that many, part of the energy and incredible innovation of this sector means that lots of early stage companies fail, and this. Again, this funding can't be the solution to any of that. Many companies, should fail and iterate and start again. So that's why this is not the answer for the very earliest stage companies. This is this was designed to enable those companies who have already raised finance, who already have backing and have investors who are prepared to back them for the future, to unlock that funding to help them get to the next stage of their development. And critically, and I think this is kind of one last one I really want to emphasize. In order to make sure that this funding could get where it needed fast, that partially defines the structures that you use. And so, setting up something kind of, completely from scratch, which didn't rely on existing investor decisions, which kind of threw all the diversity issues, up in the air and open up completely. The reality of that is that would take the time it would take to spend that money with the necessary due diligence to make sure it got where it was needed most and protected taxpayers would defeat the objective here, which is to unlock money fast into the businesses who most need it in this category.
Thanks, Gila. Thank you. I think you've made that really clear, and I'm very conscious of time and that we've got lots of questions queuing up, and obviously we want to try and get to some of those as we can. But before we do, I do want to turn to Zoe and just try and unpick a little bit about the way in which the Innovate tranche of this is going to work, and really to pick up on that point that Gila just made. So obviously in this process, there's something of a trade-off that is going to be made between the length of time that one would normally spend on due diligence and the need to try and get funds quickly to those that need it. And in the Innovate grant or in the piece, the scheme includes both grants and loans, and you've said that that will be both for current Innovate clients, but also potentially for new ones as well. How's that process going to work then for new ones, given the sorts of challenges that Gila's outlined?
So broadly speaking, out of the 750 million for the Innovate UK portion of this, around 211 million is for new customers, that are new businesses to us. And that's on top of, as Francis said earlier, our other programs that are ongoing. So that's the SMART program that many people will know about, or the Industrial Strategy Challenge Fund, or investment partnerships, etc. So all that still goes on. So 211 million is focused on new customers in the form of grants, and what we're doing there is using our usual competitive process, albeit at much higher pace. So people would have seen the recent, what we're calling the COVID-19 Fast Start competition that closed earlier in the month. So we're about to, we should be making decisions of who gets funded through that. We're hoping that some of this funding, part of the 211, will actually be used to allow us to fund more of what's come in, subject to quality, and that's what we'll be looking at very soon.
So these new clients who are going to approach Innovate UK, can you just give us a sense of what the eligibility criteria are likely to be for those sorts of businesses? I'm
expecting it to be as broad as it was for the Fast Start competition. So any business of any size in the UK, not sole traders, but broadly speaking, any particularly SMEs. I'm not sure it's going to change beyond that. It might be in terms of scoping. I think it's been incredibly broad. In the Fast Start competition, we're focusing on businesses who had ideas to address needs that had developed or emerged through the crisis. We may look at something, you might see some gaps in what we're seeing in this competition and want to address those. There may be some other government priorities that we want to address. So the scope might be slightly different, or it still might be very open. But in terms of eligibility, I don't see that changing that much from the.
And what's the time frame? What time frame are we likely to see? How are startups likely to better keep track of your deliberations?
Well, I'm hoping there'll be obviously news on our website. I'm hoping the Digital Catapult and partners will make that, they'll share the news as well as that comes through. We're hoping to get moving on this really fast. I think we're going to see announcements in May in terms of both funding being unlocked to the companies successful in this competition, but also news of the next competitions coming up as well. So in terms of that,
can we just clarify a little bit? Traditionally, Innovate UK grants have been for specific R&D projects. Is this new money going to be for projects or for companies?
It's still for projects, but I think there's a more balanced approach. So if I kind of talk over so typically we ask 10 questions in our application form, for example, the kinds of questions that would come up in a business case anyway. We've really, part of this kind of high-paced work, fast-paced work we've been engaging in, is making that much shorter. So we're focusing on four main questions around the need to be addressed and the idea and how is it innovative. The business, what does it mean from the business? What value does it add to the business as well as society and the economy? Does the business have what it needs to make this project happen? Does it have the capacity? Has it got the right people on board? Does it know what support it might need during the project or a bit later? And also, is it value for money? Do the costs stack up? So right. Broadly speaking, I would say in the shortened version of the questions, it's actually quite a balanced view between the business and the innovation.
And just to clarify, because of the question that's just come in from the audience, the 211 million, does that include the COVID-19 fund, the 20 million that was just announced and has just closed, or is that in addition to?
It's, I think it's an addition to potentially, but again, we need to see what comes, we know what comes in, we need to see what we need to fund. And I think we had huge demands come in, even higher than we were expecting. So we need to work out from that what has come in as very high quality that we really want to see funded. So exactly how much gets funded from the Fast Start competition will depend on that, and decisions are being made on that in the next few days.
Let me turn back to, thank you, Zoe. Let me turn back to Gila and to Francis and throw a couple of questions at you from the audience now on the Future Fund. The first question to ask is the will the fund match an existing investment, or does the match need to actually be new funding? I don't know, Francis, you've gone off mute. You look as if you're ready to answer this one.
It does need to be new funding, because the purpose is to demonstrate that this is government levering in additional finance to the businesses. So that is a pretty fundamental principle.
Excellent. Okay, thank you. That's very clear, very straightforward. Gina, maybe I can ask you this one. Is the fund going to be available to companies that were about to start operations in the UK prior to the investment being withdrawn?
Francis, can you have that? I know some of the issues around registration have been under much discussion.
So
in terms of operations,
substantially UK based. So no, if you were about to start but haven't yet, then no, this is for UK based businesses. And
about to start means having some staff, being registered at Companies House. Can you just give us a bit more of a definition?
Yes. Registered and company registered before the end of last year, before 31st December, and having staff here, so paying PAYE, having your headquarters here, and then if, because we know there are some companies potentially that might have a headquarters here, but maybe do quite a bit of their manufacturing elsewhere, so you wouldn't have more than your staff here. So having more than half your sales in the UK. So the phrase is being substantively UK based, and when we have that interim update that I mentioned, then we'll specify exactly what substantively UK based means.
Okay, I think that's thank you. That's pretty clear. Although there's clearly there's room for manoeuvre around the edges there. But thank you, Francis. Another question, and maybe Gila. I mean, we were talking earlier about the sort of the broader challenge for companies that are not included in really within the sights of what's already been announced. So what sort of options are available for those bootstrap startups and the ones that haven't yet raised 250,000? There are lots of examples of companies that were on the verge of raising or sort of or on the trajectory to raise that sort of level, good businesses with clear products and services in sight but haven't reached that threshold. Thoughts about that?
I mean, partly, as Zoe outlined, there's a wide package of new and existing Innovate funding that, that has different criteria attached to it and is open, and targeted at a wider range of innovative companies. So there's lots of opportunity there, depending on kind of the exact nature of your business, alongside the small business loans, which Francis touched on earlier. And a range of other sources of support, tax deferrals and support with, funding your employees, and a whole range of ways which, depending on the shape of your business, could incrementally support you to manage cash flow and to get through this period. And obviously, and I know this absolutely won't apply to all companies, but many companies in this space are also finding new markets and new opportunities, ways to pivot their current business models towards things that we didn't think we needed not very long ago that have suddenly become new and growing areas. So in no way is that intended to kind of dismiss the nature of the challenge many companies are facing, but I think it's also important to to recognize and kind of celebrate the amazing things that many small as well as larger tech companies are doing to make this situation work for all of us in new ways, and to find new sources of revenue if old ones are much more challenging than they were a few weeks ago.
Okay, thank you. There's a couple of questions about the convertible loan, which is obviously a relatively complex instrument. And Francis, your eyes brighten at the mention of the convertible loan. So let me throw a couple of questions at you. It is a complex instrument, and obviously it's one that helps businesses avoid having to fix a valuation at the time of an investment. Someone has asked a cunning question here, which is, could you not invest in the convertible loan subsequently, and then at the point of conversion, would it then become EIS eligible? That may be a fine point that you may not be able to quite stretch to at this stage, but perhaps you've got some thoughts on that?
No, that is a cunning plan which we asked, and apparently that doesn't work. That we also had that thought in as part of our process of trying to make this work with EIS.
Okay, fine. All right. No, I think that's helpful and
Good thinking.
clear. One of the other questions that has been asked is when the loan is paid back, or if it's, I think, well, there are two questions here, one of which has been asked and the other I'll ask you. If it's paid back, who's it paid back to and where does the money go and on what basis? And does the convertible have to be new funding from the UK or could it be from outside the UK? But I'm going to throw one other question into you, which is if the government ends up owning stakes in a large number of businesses, who's actually going to manage that portfolio? Perhaps you want to answer the last one first.
Great question. We are working out whether the management of, as you say, a portfolio of stakes in some great companies, no doubt, will be managed most likely by, we haven't decided, either by a fund manager contracted in or by the British Business Bank, which already manages some funds in-house, for example, investments made some years ago by regional development authorities and similar bodies. So it's a really important task to make sure that those equity stakes are managed in the right way, in a way that supports the future growth of those businesses. It absolutely isn't something that you can invest in and then forget. The convertible loans will be held in some kind of a special purpose vehicle, a container, if you like, that can then that will keep them secure, and the repayments would be to that same vehicle, unless converted. But our expectation is that the loans will be made, and then after a while there'll be a funding round, and in that funding round the loan will then convert. That is, if you like, that's the default assumption.
Excellent.
And I think, can I ask
Tom, yes, please jump in.
There? Like, just so I think I'm correct in assuming that the government is intending that the vast majority of these do convert, that the intention is to encourage people to do the conversion. Is that, am I correct in thinking that, Francis? And then just like another quick clarification, just because I know that this is a question that some entrepreneurs have had, which is like that the government isn't in, and even the way in which the loan note is structured at the moment, isn't intending to take a particularly active approach to management of those investments, just in terms of the way in which they would manage their.
That's right. So in terms of active management, it seems to me it wouldn't be appropriate for government to seek to influence the future of these companies, but we do need to be there for subsequent rounds to continue the funding. So all we're seeking to do is to add additional capacity alongside private investors, and it'll be private investors who essentially take the lead. They'll probably have someone on the board, they'll be influencing the future of the company, and government would aim to continue to add that capacity in successive rounds as they went through. And yes, to answer your first question, we would expect the great majority of loans to convert.
Excellent. I'm going to just follow up that question about company location, ownership and establishment in the UK, because there's a very specific example that's come in as a question. I think it's worth just, since we have you, Francis, and you seem so willing. Here's the question. We opened our UK subsidiary of our US top company as a permanent establishment which has a UK Companies House number, beginning with BR and FC. And we did this because it was the required way to qualify for EIS. So the question is, will we be able to qualify for these grants with this branch foreign company, given the fact that the company has actually raised more than 250k in the past? Or is that something you can answer, or is that just too specific?
No, but it's interesting that the question said qualify for these grants. So what government is offering is a loan on pretty commercial terms. These are definitely not grants. They're quite, how can I put it, assertively specified, these convertible loans, but they will require that the top company, the top level, is in the UK. And the reason is we feel there is too much scope for value to go overseas were it not for that condition. So in your example, that UK subsidiary wouldn't be able to secure a future fund convertible loan. Okay,
that's helpful. Thank you. I'm sure that those who asked that question will be grateful for that clarification. And one other one that's also kind of interesting twist on the scenarios, of which no doubt there are going to be a large number. But one of the terms of the Future Fund refers to previously raised third-party private equity. This company's raised 300k in private equity, but the current and previous directors provided about 100k of that themselves. So would that be considered as non-third party, or and therefore would it exclude them because it would take them under the 250k minimum, or how would that be looked at?
Good question. I think that is one that we will need to reflect on in the update, is to quite what third party means. What, if I can just explain a bit the reason for it, we're really seeking validation, because bear in mind is that there's no quality control from government. We're not seeking to make a judgment here. So we're relying on the judgment of others that, and when I say others, I mean, sophisticated investors, that this is the right thing to do before we commit taxpayers' money alongside it. And so whether or not the example you gave would qualify is a great example of the clarification that we will need to be giving in a couple of weeks' time before applications begin.
Absolutely, but you've given us a flavour of the direction of policy and the thinking that at least should be able to guide people to give a sense of which way you might fall on that particular one. Can I just turn back to you, Zoe, and just ask a little bit more about the mechanics for new companies applying to the new Innovate UK grants? So not your existing customers, but what are the mechanics going to be for companies that haven't applied to Innovate UK before, and how are you going to approach that?
So we're going to approach that in a similar way to the Fast Start competition. So we're going to have a series of competitions following in pretty much the same kind of vein. I think eligibility will be broadly the same. Scoping might be slightly different, as I mentioned earlier, if we spot some particular opportunities. So what we'll do, as we normally do, is we'll forewarn people. Hopefully we'll open a competition, the news will come out. And we're looking to move quite quickly, so we'll have the competition open for a short time for companies to come in and apply. There'll be a kind of a shorter set of application questions, I think, similar to the one in the Fast Start competition, and then we'll aim to turn that round through assessment to get responses out as quickly as possible. And I think critically we'll look to get a lot of the money of the grants paid up front, which is something we've not been doing before, but we feel is something that businesses need to happen. So that will be, we're trying to get money out the door as quickly as possible. So there'll be a series of these competitions. There's a range. I mean, in the previous Fast Start, we had a limit of grants request of up to £50,000 within de minimis, which makes some of this a lot easier in terms of state aid. Companies can, if they haven't used up all their de minimis allowance effectively over the 3 years, the rolling 3 years, then they might be able to come in for more than that, and we'll state that in the competition details. So that might allow companies to take their innovation a little bit further, or take an idea which is a very early stage onto the next stage. So we're giving some flexibility there as to how much grants businesses want to take. But if we do it within de minimis, it means we can act very quickly. Obviously, companies need to be aware of that and provide the right declarations as necessary. But all that detail is given in the guidance for.
Great. Okay, thank you. I'm just going to, and one more sort of definitional question about what status companies have. If an existing, what does an existing Innovate customer mean? So if a company had received a grant from you, but it was 12 months ago, maybe it was 250k grant or something like that,
Yeah.
Are they still a current customer? Are they a customer?
No, not if that grant is finished. So if that project's finished, the grant has all been completed, they are no longer a current customer. Whether they're a new one is a good question, actually. I should get some clarity on that, because technically they wouldn't be new to us. But in terms of the funding part of the 750 million, which is for existing customers, they wouldn't be into that.
Okay. And can I ask you one other question about the way in which the funds might be deployed? There's a question about the degree to which the Innovate funds could potentially be used to help in the levelling up policy, in terms of reaching regions where perhaps funding hasn't actually reached so effectively in the past. Is that something that's in your mind, in your thinking?
It certainly is, and actually it's normally in our thinking, and that actually for the last few years we've been tracking where our funding has been going throughout the UK, and it is spread pretty well. I mean, it goes across the UK. If you normalise approximately according to number of businesses. You know, it's not just the London and South East that fare well. So this is something we're aware of, you know, in everything we do, and certainly we'll be looking at that in this series of competitions as well, to make sure that we can enable businesses fully across the UK to get benefit from this.
Excellent. We're getting very close to our limit, and you have all been remarkable in your willingness to try and address some of these really quite arcane examples and situations. I think perhaps you know, if you're willing to, we could answer one or two more questions if you've got time, because there's quite a lot out there. But it's up to you whether you. I don't know if we've reached 6 o'clock. I don't know whether you turn into pumpkins at this point, or whether we could just extend your indulgence for a couple more minutes. I'll ask you one more question, and then I think perhaps we'll just ask you each to make some closing remarks, if that's okay. And I'm afraid, Francis, this is probably another one for you. And it's really about the eligibility to the fund again, for those companies who haven't received an investment or in the form of a CLM, but have received equity, whether they would then be eligible for a match with the future fund. So the form of a matched equity investment rather than a CLM.
So no, I'm afraid that doesn't work. And the reason, very briefly, is state aid again, that the co-investment from the private sector being on the same terms, exact same terms, the same loan note as the government, is our demonstration that we government, on behalf of the taxpayer, working in the market on a market principle. And so that's why we can't match equity, because if the private and public are on the same terms, that demonstrates that the public is in the market, and therefore it's not state aid. So I'm afraid that's where that comes from.
Excellent stuff. Okay, look, thank you all, because you know, we've now received, I think, 107 questions, and I would like to thank everyone who's asked those questions. That's just under half the participants in this webinar have actually asked a question. Look, we will take those questions, and the officials will get copies of all of those questions, and we'll use them to refine thinking. So don't feel that just because we haven't actually managed to get to your question doesn't mean that it's wasted. It's incredibly helpful in this process as the guys iterate their way through this. Maybe I just ask each of you for one closing thought to top this off. Gila, perhaps we could start with you, just a few closing thoughts.
Thank you. And yeah, we really look forward to receiving all those wider questions as we progress through this over the coming weeks. I mean, really, I think just that, you know, the last thing I'd say is, you know, this is an, you know, extraordinarily challenging period, but you know, the opportunities ahead are really, really significant. And as I mentioned at the beginning, you know, the other half of kind of my day job has been looking at the ways in which tech have been getting involved in the response to COVID, and it's been quite extraordinary to see what's been possible, and exactly what it is that innovation can do. So the extent to which you have, you know, every citizen, every business, and every government really around the world with, you know, the potential of digital innovation now absolutely front and center of what everybody is thinking about, you know, is quite extraordinary in terms of what that might mean for the future. So it is hard now on all sorts of levels, but reasons to be optimistic, certainly, I think, about the future.
Excellent. Francis, thoughts from you?
I mean, two thoughts from me. One is I would love to have that conversation that Gila just hinted at with others and with this group in a few weeks or months' time. I think that is, I don't know about others on the call and in the audience. For me, this has been such a revealing time. I don't want us as a society, as a country, just to go back to where we were, because I think what this time has revealed is some new possibilities, and it'd be great to have a conversation about that. And then the other thought is that nothing is fixed forever. So I can see from the questions that people have you know, reservations and concerns about some of what we've talked about. It is evolving. Government is being much more agile than it's ever been in my career. So please don't be discouraged by things that you have heard, because there is room for evolution and learning in all of these things.
Thank you, Francis. That's excellent optimism there. Thank you. Zoe, your thoughts?
I was going to essentially say what Francis just said. You know, we are keen to learn lessons. We are keen to work at the pace required to really help companies and get the help to them when they need it, and to the right companies. The demand is there. We were amazed by the number of applications we received. We know the demand is there. We know we can do what we can to help. But where we don't quite get it right, you know, we are going to learn from that, and rest assured that we will take lessons learned going forward. But we're really excited by seeing the innovations, and we want to do what we can to help the sector move forward and to keep growing.
Excellent. Thank you. Thank you very much, Zoe. And Dom, finally, thoughts from you.
Yeah, I mean, I think the main thing to take away, and you can see this from the sort of 100 or so questions, is that understandably when government does something, sometimes there's more questions than there is answers, particularly at the pace in which we're operating. And I think that's entirely reasonable. Like, at the end of the day, like, you know, as the non-government employed person on this panel, I get to say, like, you know, go easy on them right now. It's not an easy circumstance to be working in. And I think, you know, one of the things that most struck me is a lot of the questions are entirely understandably, and like I said, I've been doing a bunch of these sessions as well myself over the course of the last 2 weeks, the specifics of exactly how these things will operate. And all I can say to companies is, look, that detail is going to come very soon. And the reality is, like, you know, there's a sort of element of people can ask the understandable questions that they would have, but the reality is that, like, we'll see that detail very quickly. One thing that I think is super important for you as companies is to be really, really clear about what is appropriate for you and what isn't, and understand with total honesty, like, okay, if you're not, you know, if you're not over that 250 limit, the reality is you need to be looking elsewhere and take a decision pretty quickly about what is appropriate for you and how you can act. And so I think, like, that's the best thing to do, is, like, take a look at the whole board of support. Like, there are a lot of places, you know, we're putting out information on it, Tech UK is putting out information on it, Capital Enterprise is putting out information on it, as to what support is available holistically, and understand what works for you, what doesn't, and then hopefully you can access the kind of help you need to survive this period.
Excellent. Dom, thanks so much. And just to reiterate, you know, a thank you to all of you. And Digital Catapult is here to provide that kind of advice, support, and networking as well. I think, you know, as this whole thing develops and goes forward, the degree to which the tech sector is making an incredible contribution to the response to this whole crisis, I think is remarkable, and there are all sorts of extraordinary stories. There will also be very difficult situations that people are having to cope with as well, and I think everybody understands that. And as Dom said, you know, the answers are going to come, and it won't meet everyone's challenge, and not everyone's problem will be able to be addressed by this. But I think the more that people can share the challenges that they're going through and try and identify the sorts of things that might help, I think you're seeing a government that is remarkable in its willingness to listen in a way that is I think, unprecedented, as we face circumstances which themselves are unprecedented. So thank you for everyone for joining. This will be available for people to download if you haven't been able to meet it live, and we will pass all your questions on for people, for officials to look at and consider. So it only remains to me to thank Francis, Zoe, Gila and Dom for being brilliant panelists and putting up with being asked difficult and sometimes complex questions and answering them on the fly. And thank you all, some 350 people who joined this call, for taking the time out, and I hope it was helpful to all of you. Thank you very much. Goodbye.